being in the Fed, you must understand risk management, and that there's a big risk that you may come on shortly after the president tweets about Federal Reserve policy.
Yes.
As David just said, 22 days in August, 19 tweets by the president. Tell me how you look at this differential between German yields and U.S. yields. Is it a competition?
No, I don't think it's a competition, number one. Two, it's a different economy. I mean, the U.S., obviously, exports and imports are important to us, but Germany even much more so. So I don't think they're apples-to-apples comparisons.
Do we need to set our interest rates relative to European or Japanese or anybody else's rates?
No. We need to do what's appropriate for the U.S. economy, taking into account that there are effects, global effects on the U.S. economy, but ultimately the decision's what's best for the U.S. economy.
Is there a case to be made that by reducing their interest rates, they reduce their currency and they get an advantage in trade?
That, in theory, is true, but if you look at the last cut we took, a 25 basis point cut, the dollar moved in a different direction, right? So right now, the U.S. Treasuries and the dollar are safe assets. And the world is looking, in a world of volatility, they're looking for safe assets.
So when you take and you start to set where to put interest rates, you don't say to yourself, well, I can't go higher and I probably should go lower because of the differential between the U.S. and Europe?
So you can't ignore what's happening in the rest of the world. And you don't want to be so far out of sync with the other major economies that it would cause problems. I don't think we're out of sync in a major way right now.
But it's 200 basis points out of sync.
But you look at where we are with respect to our inflation plus our neutral rate, I think we're pretty much where we need to be.
Let's talk about where we are in terms of the economy. How is it? What is your outlook for the economy? What is your view of growth right now? Is it too slow?
No, I think it's exactly what we had anticipated a year ago, even 2 years ago. We're going back to trend growth, roughly 2% growth.
And so where would you say policy is relative to that trend growth?
So in December, I was not supportive of the increase. I was supportive of the decrease somewhat reluctantly this time around to get us back to where I think policy should be. We're roughly where neutral is. It's hard to know exactly where neutral is, but I think we're roughly where neutral is right now. And I think we should stay here for a while and see how things play out.
So you don't see a case for further stimulus to the economy?
No, not right now.
Why not?
Because you look at the labor markets are strong. Inflation is moving up slowly, but with the last CPI print, it was a good print. We'll see how PCE comes in. There are negative headwinds, right, to the economy. But right now, I don't think they call for any drastic action. I think we can take some time and see how things play out.
Tell me about those headwinds. Which ones do you think are the major ones we're facing?
I think trade. What we hear repeatedly from companies is the trade uncertainty. It is not the cost of capital. When you talk to business leaders, they are not saying, I'm not investing in plant and equipment because the cost of capital is too high. That has never factored into any conversation I've had. It's about the policy uncertainty.
Could you give me one specific example of a conversation you've had where an executive has said, I am holding back on investment because of the trade uncertainty?
Yeah, so one of our contacts was looking at the China situation, saying I may need to move my supply chain to other countries. One of those countries at the time he was considering was Mexico. And then, of course, because Mexico's a NAFTA country, what could go wrong?
Right.
Well, then we're talking about putting tariffs on in Mexico. And so you think about that individual and their board, how can they make a decision in this environment?
Let's talk about the yield curve itself, which has been flat, negative for a bit. What kind of signal do you get from the yield curve?
So I think it is a signal, an important signal, but it's one of many. Again, you have to look at the labor markets, very strong. You have to look at growth. Although we think that 2+% growth is weak, it's not. It's exactly what we expected.
When you look at the risks, global economies are weak, and some are even in recession. Certainly some have printed negative growth. How much of a risk is that to the U.S.?
Well, I think it is a risk. But again, a lot of that depends on the country, right? They're very specific to each country. But again, this policy uncertainty is not only a U.S. phenomenon, it's a global phenomenon right now.